The fall market is in full swing and interest rates are dropping. But is now the right time to make a move that you've been waiting for? On October 29th, 2025 marked a pivotal moment as the Bank of Canada delivered a widely anticipated 25% basis point rate cut to its key lending rate. And it was the second consecutive cut, bringing the overnight rate down to 2.25%. And if you've been keeping an eye on rates this year, you probably know that this is the most recent drop, and it marks a total of 1% in total cuts so far in 2025. This will come as welcome news for both new buyers and those with mortgages up for renewal. But there's still plenty of caution. Tariffs, inflation, and a shaky job market all loom large. Hey, it's Sernoskie with LePage Team Realty. And in today's video, we're going to chat about the Bank of Canada's latest interest rate cut. And by the way, if you're looking to buy, sell, or rent and invest in Ottawa, or have any questions about the real estate market, please don't hesitate to get in touch. You can text or call me at 613-277-6075 or shoot me an email at serno@royallepage.ca. And don't forget to subscribe so you don't miss out on more videos just like this one. Before we get into it, let's paint a picture of where we stand currently. The past few years have been a grind as mortgage rates climbed to 5% last spring, which sidelined many buyers. But over the past 18 months, we've seen a gradual decline, and this brings us to where we're at today at 2.25%. Inflation rose to 2.4% in September, a half-point jump from the August 1.9% target, and that's added more fuel to the affordability fire. Meanwhile, the job market added a robust 60,400 jobs last month, but unemployment still sat at 7.1%. And in making this most recent rate cut, Bank of Canada Governor Tiff Macklem sounded the alarm on the state of the Canadian economy, saying, quote, "Unless we change some other things, our standard of living as a country as Canadians is going to be lower than it otherwise would have been. We need to get our productivity, growth up, and if we can do that as a country, we can bend that curve up." So back in January, the Bank of Canada thought economic growth in 2025 would hit 1.8%. Now they've slashed that to 1.2% for 2026, and it's even worse going forward at 1.1%, down from 1.8%. It only creeps up to 1.6% in 2027. The translation here is that no big economic rebound is coming anytime soon. So here's what's happening. Number one, the tariffs are hitting businesses hard. Costs are up, and U.S. demand for Canadian products and services is down. Number two, investment is frozen. Canadian companies aren't building or expanding. And number three, jobs are soft. Population growth is stalled, and people aren't spending like before. Warren Lovely from the National Bank said, quote, "We're lowering rates because the economy is under immense strain. This October policy decision signals the Bank of Canada's willingness to act amid weak GDP growth and elevated unemployment and those unpredictable U.S. trade winds. Lower rates mean borrowing costs dip immediately, especially for variable rate mortgages. But let's be real, affordability still remains a big issue for a lot of people. Prices have softened a touch, but for many, the goal of homeownership is still a steep, steep climb. A 25% basis point cut won't magically bring tons of buyers off the sidelines as long as economic uncertainty persists. The Bank of Canada has also hinted that this recent rate cut would be the last one for a while. In a statement, they said, quote, "If inflation and economic activity evolve broadly in line with the October projection, Governing Council sees the current policy rate at the right level to keep inflation close to the 2% while helping the economy through this period of structural adjustment." Now, what about sellers? Demand for homes should theoretically increase with improved mortgage affordability for buyers. To what extent, though, is the question that remains to be seen. We're already hearing whispers of a Q4 rebound with sales volume poised to climb as confidence nudges upward. But bigger economic wildcards like inconsistent U.S. tariff policies could keep some buyers hunkered down. So where do we go from here? There's plenty of uncertainty right now in the Canadian economy, which is not great for the housing market as a whole. However, Governor Tiff Macklem stressed flexibility and said the bank stands ready to ease more if growth falters or tighten if inflation accelerates. The next rate announcement is scheduled for December 10th, 2025, with an additional cut not currently expected. But economists like those at BMO or TD note that the door remains ajar for early 2026 action if the labor market softening persists. Well, that about sums everything up. Thanks for watching. We'll see you in the next video.